Again, this is Mark Espy with MarketTamer.com. We're talking about the CompQ, and must remind everybody that this is all for educational purposes only. Please do your own due diligence. So you can see here we have almost a parabolic move up from this double bottom that was put in. I'll get to that in a moment, but we're putting in a sideways trading pattern right now. On Wednesday, we actually had not classic, but very close to being a shooting star type of a pattern. Then we had a hanging man and then a doji today, which shows a lot of indecision at this level. And it's interesting to note that it lines up very perfectly with this swing high that was put in back here in January. And that's at about 23.25. So this channel is fairly definitive, and I feel it's going to come back and trade in this range. Question is whether the 200 simple moving average is going to support it, and whether we begin to trade even in a narrower range as it comes back down here to retest the 200 from the top side. So we'll just have to wait and see if in fact that's what occurs. If it does break down below the 200 simple moving average and doesn't remain in the narrow range, then it's going to come back down probably and retest this double bottom but down here. If it does break above the upside here, we have resistance at 23.75, which lines up with this shelf back here that was put in early March, as well as this gap that was put in here in May. We also have another shelf that was put in here and a swing high just above 24.25. And then finally the top side at 25.35. Down here, as I mentioned before, we have a double bottom, and that's, it's basically around 21.50. But we also have the February 5th low, which was put in about 2100 or so. So I would say the support resides somewhere between 2100 and 2150. This whole zone here should act as pretty decent support. Should it break below there, the next level of support would be at 2062. There's a 50% Fibonacci retracement level at that level. Then 1900 from some gaps that were put in mid-2008 and late 2009. And then finally, there was a swing low that was put in at about 1730 in July of 2009. The stochastics looks like it wants to begin to roll over, and maybe we end up having a %K line crossover in the %D line right here in the overbought area. So if it does that and then retraces below 80, then that will be confirmation that this little flag that we're putting in right now is going to fail and come back down here. Now, flags are usually continuation patterns, and this is a bullish move here, so we need to be aware of the fact that it could break up above here, and then we'll look at the aforementioned levels of resistance that we already spoke of. The MACD is not really doing me any good. I can't really take anything from what it's telling me right here, so we'll just have to wait and see what's going to go on there. Okay, as I had mentioned before, volatility appears to be coming out of the market somewhat, as I felt that it would. Maybe a little bit more sanity coming back into the way the market is trading, but we shall see. I think it's important to remain nimble, certainly, and remain hedged, and make sure that you're well diversified and your position sizing is prudent. Well, with that, I wish you a good week of trading, and I look forward to talking to you next week.